And welcome. It's Mary Ellen McGonagle here with your weekly MEM Edge show. And several developments shaping up as we head into Tuesday's election. Lots of volatility, lots of bounciness, if I may, lots of big earnings. And there was a response to the markets. And as stated, we'll go ahead and take a look at that. But before, let's talk about some of the data that drove price action last week. We did see consumer confidence jump in October. We also saw Q3 GDP come in relatively strong, 2.8%. So the economy is still chugging along. That is good news. We did get key inflation data later in the week, personal consumption expenditures, and it showed inflation receding. So generally good news on the economic front. Today, a little bit of a glitch. We saw that the economy added only 12,000 jobs in October. Now, economists are citing the hurricanes and the strike at Boeing. However, there are other Wall Street firms that are saying not so fast. That was a very weak data point. Now, next week, you will want to be aware that the FOMC will be announcing their interest rate decision. At this point in time, the odds, about 99%, investors are on the lookout for a 0.25% decline in rates. So nothing overly dramatic there. But let's go ahead and jump over. Take a look at those markets and see where did we close for the week. And here we are looking at a daily price chart of the S&P 500. Now, Thursday was a very tough day for the markets. We will get into how earnings drove price action yet again, and we did get some big companies reporting, hence this pullback. In turn, we did see the RSI enter into negative territory on the daily chart of the S&P. We have that MACD trending downward, but we are still up here in positive territory. The index did pull back just to that 50-day simple moving average. So net a bit mixed, but we are still constructive. Let's go ahead and take a look at the tech heavy Nasdaq, and this particular index had been bouncing around at new highs before pulling back on Thursday. Now we can see the RSI is also in negative territory. That MACD is positive. And at the end of the day, we did close the week below that 21-day simple moving average. I am going to keep an eye on that 50-day, which you can see historically can precede further downside, but that is where we stand, certainly in those larger, broader indexes. Now, let's go ahead and take a look at the underlying sectors in the S&P 500. This is a 2-month daily price chart view of those 11 sectors, and I've gone ahead and added an RSI indicator. In descending order is how these are positioned, and it is a 2-month daily price chart view. So let's take a look up here at the forefront, communication services. It was the only sector to post a positive gain for the week, all about mega cap earnings. We will get into that as we move through. From here, let's go ahead and take a look at some of these other sectors that are sitting up here at the forefront. Consumer discretionary, a lot of that today having to do with Amazon's big move, a heavyweight name in that particular industry group, and it's also sitting up there at new highs. So we have two very highly growth-oriented sectors sitting up here with relative outperformance. Here's your S&P, so we're looking at those sectors that are in front of that. And financials up here, XLF, we did see bank stocks rally about 1.3%, but not overly strong in that sector. You can see that we're pulling back below that 21-day simple moving average, and your momentum generally trending lower, so not overly exciting. As we move through, let's take a look at technology. That's XLK. And two of the heavyweight names in this sector, the heaviest weighted, are Microsoft and Apple, also Nvidia. Each of these names did falter this week. We can see the tech sector is closing just at that 50-day simple moving average. We do now have a negative RSI and that MACD trending downward as well. We'll take a closer look at other subgroups here in that tech sector as well. But let's go ahead and take a look at areas that are now in declines and downtrends. This is XLU, the utility sector, and take a look. It is now down below that 50-day simple moving average. Pretty big volume on today's selling. We have an RSI in negative territory and trending lower. Now, this had been the top performer year to date going into October. And of course, the beginning of this month, we are seeing that break below this 50-day. Now, we have seen that take shape in the past after extensive gains. So keep an eye on this sector for a potential reversal. But at this point in time, it is in a downtrend. Moving through, looking at other areas, XLRE. This is an area that generally fares well in a declining interest rate environment, but we are not seeing that. Interest rates are increasing. We are seeing companies coming out with their numbers and they are not good. So this REIT XLRE real estate sector is now also below this key 50-day simple moving average with the negative RSI and MACD. And last up here, we can take a look at healthcare. It is continuing to struggle. This is XLV, and a lot of that having to do with earnings reports. Some of these bigger pharma stocks are not coming in with great numbers. We are seeing the group continuing to decline. It'll be certainly interesting to see if this potential bounce over the last 2 days materializes into a potential reversal, but for now, very much in a downtrend. From here, we're going to take a look at some ETFs that are really helpful as far as getting your arms further around what's shaping up in the markets. And again, 2-month daily view, RSI sorted, and here we are up at the forefront. This is the yield on that 10-year treasury. And you can see we're now up here at 4.36 on the 10-year treasury. Now, there are economists that are calling for us to go as high as 5% before we see relief. We will see next week whether that Fed decision has any impact. But at this point in time, we are seeing interest rates continue to trend higher. Also of note, volatility, and this is something I talked about in my MEM Edge report last Sunday, and that is the concept that volatility going into earnings does have a history of increasing. And of course, it's all about the uncertainty as far as who will be elected. And quite frankly, I'm surprised that we're not higher. We're closing just below that 22 level, which is not alarming quite yet. Anything above 18 indicates fear creeping into the markets, but of course, we still have 2 more trading days before the results come in. Also up here at the forefront is software stocks, and generally speaking, we're seeing relative outperformance here, all about earnings. I'm going to share with you the S&P 500 stocks sorted by relative strength, and you will see a number of software stocks up there exhibiting outperformance. Talked about bank stocks. They were up this week, holding up relatively strong. Again, all about earnings. And then as we move through, let's take a look here at other areas of the market. And here we are with small caps. This is IWM, the Russell 2000. It did end the week flat. And this is an area that will be impacted negatively by a rising interest rate environment. So we are seeing just an awful lot of volatility, but generally sideways price action in those small cap stocks. Moving through, another area that's very impacted by rising rates is biotech stocks, but we did see a 1.77% rally today. And I will tell you, it's all about earnings and companies coming in with numbers as well as clinical studies that are above what was estimated. So that is an area to potentially keep an eye on. We're not in an uptrend quite yet, but I talked about technology. Let's take a look. This is the semiconductor index, And you can see that we have broken below this red 50-day and this 200-day simple moving average. And we have high volume on that selling. A couple of reasons here. I talked about Nvidia, but I'll share with you another stock that is very widely followed that came in with numbers that were soft and huge decline. This is Monolithic Power, MPWR. I believe it was down about 18%, and that's going to impact other names in that industry group. We now have a MACD and an RSI that is negative. Also, when looking at the markets, you'll want to be aware XHB, that's the Home Builders ETF, and you can see this continued decline here, all about that rise in interest rates and not really terrific numbers. We had DHI, a home building company, come out with numbers that were not exactly good, and that's also impacting the overall group. Now from here, I did mention that we can take a quick look at the S&P 500. This is something that you can do very easily in Stockcharts. I have any number of lists, the Nasdaq 100 members, the S&P 500, and so on. And what you can do from here is, again, ask for what's called a candle glance view. That's that 2-month view. And then sort this list of 500 stocks by relative strength in descending order. Now, we are not going to go through each of these names, but I do want to share with you a phenomenon that is continuing to shape up as earnings are continuing to be released. And quite simply, it is the fact that earnings reports are the biggest driver of these stocks that are sitting up here at the forefront exhibiting outperformance. This is a stock I had never heard of, Dayforce, D-A-Y, but it is a software company, super high volume, gaps up into a base breakout, looking very constructive. And then up here, Paycom is another software stock, also exhibiting strength, gap up. Always want to take a look at that volume. If you see that above average volume indicating institutions coming in. Also, we do have travel related names. I'm going to take a look at BKNG closer as we move through today. I talked about biotech stocks. This is INCY, gap up into a base breakout and a nice continuation rally, which I did cover last week. We are going to get more into that again this week, but quite simply, when you see these gaps up in and during earnings season, you can bet that it's all about these companies coming in with numbers above estimates. We are seeing somewhat exaggerated moves, but it is highly indicative of what is moving the markets, and that again is earnings. So as we move through, you also want to be aware of some industry group movement. This is Gilead, and there are other medical or biotech related stocks that I noted in going through this. But from here, let's go ahead down and take a look at those underperformers down here in the lower quartile of those S&P 500s. I hope nobody got a headache with that one. But when you look at these names that are down here in the weaker area, it is gaps down, general downtrends. And again, it is going to be all about earnings. And the reason that you want to pay attention is so that you can get your arms around whether there are industry groups that are exhibiting more by way of weak earnings. And certainly down here in this lower quartile, you can see a number of, I talked about healthcare. This is Merck sitting down here, but also consumer staples. Here's Coca-Cola down here trending lower. This is Colgate, and then other names I talked about, utility stocks pulling back. AES is one such name. So again, you can also get your arms around group movement by a quick peek at what is leading the market, as well as those areas that are not. And we are seeing a number of these defense related. This is LMT, Lockheed Martin, and then another name, CDW, in that aerospace defense. So again, looking for that group movement as well. And then if you are looking for potential candidates, oftentimes you can move to this middle ground area. And really quite simply in going through this list, you will see that we have a number of areas that are rather negative. But as you move up through this list, and perhaps it might be easier if I just share with you the ticker symbols, but I'm on the lookout for stocks that are above their key moving averages and that are really moving ahead despite general overall weakness in the broader markets. And by and large, it again is going to be companies that are reporting earnings. Let's go ahead and see if we can take a look at some of those tickers there that are exhibiting rather than scrolling through there any further. What we can see here are companies such as CF. This is a industrial company, and they actually have agricultural fertilizers, and we can see the stock hit a new high going into the beginning of October, pulled back, but we are seeing a potential downtrend reversal, and it's all about the company really benefiting from increasing prices, and then also reduced natural gas costs are helping. So what I would look for this stock to indicate a true reversal would be get that RSI a little higher above this net neutral, go ahead and have that MACD black line cross up above the red, and that would signal a new uptrend similar to this late September period, and then ideally get that stock back above that 21-day simple moving average. Another company that is sitting up here, and oftentimes it's going to be after earnings, not as interesting. This is Domino's DPZ. You can see that move higher back above these moving averages, a now positive RSI. However, this 200-day simple moving average could be a barrier as it potentially continues to advance, but certainly one for the watch list. And the reason I point that out is from my work, I'm on the lookout for those stocks that have exhibited outperformance in the past, indicating potentially strong management, strong systems in place that may still be there that could help the company trend higher. One last name that we can take a look at here is SYK, that's Stryker Corp. And this is a company that also came out with strong numbers. They're in the medical products space. What I like about this is, in addition to today's sharp advance on nice volume, also we had a double bottom formation going into that earnings report. It too is a company that has exhibited the ability to outperform the broader markets. If we can just get a little more momentum here, that could be quite interesting. Now, from here, let's go ahead and take a look at those mega cap M7 names, because last week was very critical. We had 5 companies report earnings, and we're in a stage where there is what I call the have and the have-nots among these M7, and certainly they're impactful on the broader markets and how they're faring. So let's take a look. Amazon up here at the forefront. The stock gapped up 6% into a base breakout. Beautiful chart, high volume. We have this MACD crossover. This is on my MEM Edge suggested holdings list. Today's move higher was all about the company's improved cloud computing revenue generation. Great news for AI. Alphabet up here also at the forefront. They reported earlier in the week and another gap up. This too is about cloud computing. And then also for both companies, advertising sales came in stronger than expected. Good news there. Now, as we move through, you will want to be aware Meta Platforms did pull back after their numbers, all about increased spending in order to improve their AI infrastructure. Not as bad, certainly, as Apple, that came out with weak sales. There's fear about sales of iPhones in China, and you can see the stock is now back below this 50-day simple moving average, negative RSI, MACD trending in a negative fashion. Last up, let's take a look at Microsoft. This company also announced increased spending, and you can see the significant drop. MSFT now back below its 200-day simple moving average, negative RSI, and a negative MACD. From here, I'm going to share with you some stocks. We're going to take a look. Now, this is a name that we talked about last week, and it was that concept that these companies that are gapping up after earnings, they're not going to be quite this dramatic. This is TWLO. but oftentimes you will see them advance beyond that initial move. So here we are with TZOO, and a couple of things if you're on the lookout for this, and again, it is taking place pretty much every day this week, where you will see these companies gapping up on big volume. That's going to be one of the key components. There's accumulation taking shape here. Also, take a look at that MACD crossover. That's that black line up through the red, indicating a new uptrend, and you want that RSI in positive territory as well. Now, from here, we can take a look at another phenom that shaped up with TZOO, and you don't see it that often, so I am highlighting it. It is what is called a high tight flag formation. And what you want to take shape during this, normally this basing period is a little bit longer, but you want to see that volume lighten up on that back and fill formation. And then eventually the stock will advance above the high of that flag formation, indicating a high tight flag formation breakout, which is quite bullish. The other factor when looking at TWLO is that peer company BKNG also came out with strong numbers on Thursday, and that is going to help TWLO as well, because when these peer stocks are coming out talking about increased consumer spending in this travel space, it is oftentimes going to impact other names in the area. So also, I did want to highlight for you some other types of chart information to be on the lookout for. Let's take a look at a couple of other companies that reported their earnings this week. First up is TWLO, Twilio. This is a software stock, and take a look. Gap up, big volume, and you can see that nice move upward beyond that, up another 5% today. We're going to take a quick look at that 15-minute intraday chart. And what I wanted to highlight for you is you do not need to be an intraday trader to utilize this service. It is something, and by service, I mean to drill down into a 15-minute. Oftentimes, it can be very helpful as far as providing insight into whether that short-term trend will remain in place. So here we are with that gap up in TWLO on earnings. You can see that move into bullish territory with that RSI. Now, as long as that RSI remains above that net neutral 50, you can remain with the stock. And in turn, that will give you the ability to take advantage of today's 5% rally. Same with that MACD. It was trending lower, indicating that sharp momentum had receded, but we are still up here in positive territory. From here, let's go ahead and take a look at another stock that came in with numbers well above estimates. And we'll take a look again at that shorter term chart. And this is LOAR, and you should immediately see a little bit different of a view here. This is a IPO aerospace and defense stock, and what we can see is after the release of their earnings, they did enter into a negative phase with that RSI. So we are down here below this net neutral, or below this 50. We also closed below the 5 and 13 simple moving average. So we had that period of a downtrend that took place after the earnings related move. However, if you are shorter term in your trading, what to be on the lookout for that stock to regain its near term uptrend on that 15-minute needs to regain that RSI, get back above these moving averages, and then get that MACD into positive territory above that net neutral 0. So really indicative of what we're seeing in the markets. And I think it is worth the time to take a look at those shorter terms. From here, I am going to share with you some monthly charts. And quite simply, it's all about zooming out to a bigger view. So first up, we're going to take a look at Target TGT. I'm going to go ahead and pull up the monthly on that. What I did want to highlight for you is this concept of a new uptrend in a mega cap name. And first up, if we look at TGT, they had a tremendous period back here, 2018, and then 2019 into 2022, really just bypassing the 2018, a little bit of a pullback here in that bear market. But most importantly, on the bullish side of things, we did get that lift off with that MACD back here and a bullish move into the RSI. Now, once we did decline below that and got into negative territory, the stock moved below the 6-month moving average. That was your sell signal. First up here was that MACD black line down through the red, indicating a shift in that uptrend. Now, I'm pointing out target because it caught my eye at the beginning of this year as a potential downtrend reversal candidate. On this monthly chart, it moved back above this moving average 6-month MAV. RSI turned positive, but we did not get a positive MACD, and hence we have been faltering. So last up here, I will share with you a stock that did fare well as it relates to a longer term downtrend reversal. It's another stock that I added to my MEM Edge report back here, and this is Nvidia. Let's go ahead. Again, we're looking at a monthly chart, and I did add the stock in January of 2023. Let's take a look at those dynamics. We see the stock moving back up above this 6-month moving average. We get that bullish RSI, and we have that nice uptrend materializing here in that MACD, preceding this very healthy uptrend. This is a stock that I've kept on my long-term buy and hold list since January of 2023. Now, from here, I will share with you a name that could be shaping up. It's on my watch list, and that is Tesla. Now, that's certainly been a volatile name here, as it has moved around both earnings and delivery news and other AI-related news. But here we are with Tesla on that monthly, up above that 6-month moving average. We have that MACD dipping up into positive territory, and likewise with the RSI. Now, what is missing is most definitely needed, and that is more momentum. So if we go back to this October period, hopefully you can see just how strong this upside momentum is, really helping to propel the stock higher. And at this point in time, the stock is sitting up here quite nicely, but we don't have that momentum quite yet. That's it for this week. Have a fantastic weekend. I'll look for you here again next Friday.